Hi everyone, welcome back. One thing I'm running into all the time right now is buyers finding a house they love. The location is great, the layout works, but then they see an outdated kitchen, an old roof, or repairs that need to be made. And they immediately think it's out of reach because they don't have a huge amount of cash sitting in the bank after closing. But what if you could buy the fixer upper and roll the renovation cost right into the mortgage? That's why I invited Alex, one of our trusted lending experts, to talk about the FHA 203K renovation loan and how buyers may be able to finance both the home purchase and the renovations together. Alex, thanks for joining me.
Hi, Rachel. Happy to be here. Thank you so much.
Of course.
And what you mentioned is exactly correct. There is a program that is very creative that allows a person to buy a property that needs a lot of TLC, something that you could probably not even live in, um, to be able to get financing to buy the property, but also financing for a contractor to be able to make the house look brand new. So that there's ways of making that happen. So I'd love to discuss that with you.
Nice. Alrighty, let's start with one of the biggest misconceptions. When people hear renovation loan, they automatically assume they need perfect credit or a large down payment. Is that really the case?
No, not necessarily the case. It's a myth. So the FHA, Federal Housing Administration, it's a federally backed loan. It's originally intended for first-time buyers, people that don't have the best credit, 580 credit. Okay. The down payment for FHA is 3.5%. So the type of program that somebody can buy a house that is ready to live in, the same guidelines apply to qualify for a 203K renovation loan, 3.5% down payment. So what happens is they're going to take money from the value of the house once it's fully completed. Okay, it's not worth. They're not pricing it based on what it's worth with all the mold and broken this and broken that, and right, the air conditioner's not working, things like this, abandoned houses as a perfect example. They're going to take an appraiser license that's going to say, based on a brand new kitchen, a brand new this, a brand new that, this is what the house will be worth. And because this is what it'll be worth, remember, it's a 30-year loan. 30 years is a term. This is not what a house is today. It's once the house is built, what does it go for in the market? They'll take the equity, as they call it, the value in a house is called equity. They'll take the money from the equity and lend it to you. And that's how you repay the loan back, is the money you're borrowing, essentially.
Yeah, that's actually a lot more doable than most people think. I can
Yeah,
already see how that could help first time buyers. Once those improvements are made, the home should be worth more.
that's right.
Now, I know there are a couple of different versions of the 203K. Can you break down the difference for us?
Sure. It breaks down into two paths. The first path, in simple terms, is called limited review. The other one is called standard review. But where's the line? Where's the line in the sand? $75,000. So if you're dealing with cosmetic repairs, $20,000, not a lot of money. Limited review. Now, if you're going bigger, if you're going to take down some walls, if you're going to have a budget that's over $75,000, it's a bigger project. That goes to the standard FHA 203K loan.
I really like that. It's always good to have options.
Yeah.
From a buyer's perspective, what does the process look like? Are they receiving the renovation funds at closing and managing everything themselves?
No, absolutely not. I don't think they would want that anyway. Imagine getting all this money coming your way and not paying the person you're supposed to pay and losing the check. It's very stressful. If you don't have experience doing it, why would you want to touch something so impactful to your future with banks and all this legalities? It's too much. I would say it's too much. To
Correct.
me, it's better you have the process work itself. It's a professional process with underwriters who are
Mhm.
people who certify that everything is actual and factual and correct. Okay. So what happens is once you have a closing with these renovation loans, you own the property, but this is when the construction, the money starts to flow to the contractors. And then
Mhm.
they get the money, they buy the material, they hire their workers, and they do the work. There's an inspector that goes into to see the property was done correctly based on the plans. The finances are all correct. They send more money. They have money held on the side, by the way, 15, 20% in reserve, just in case you run out of materials or you need to buy more or something gets broken, whatever the case is. This is all handled internally through the process. So you don't want to touch that money, trust me, but it's handled for you. By the time it's done, you get the keys
Mhm.
to your home and it's brand new again for you to move in.
Honestly, that's reassuring because unexpected costs are one of the biggest fears buyers have when they're
That's right.
taking on a renovation project.
Yeah.
Now, let's talk about some of the challenges. What's the biggest mistake you see people make when they're trying to use this loan?
Well, the the biggest one I would call it, it's called the contractor trap. So if you're looking at a house that's move-in ready, you're not thinking I have to fix things, right? When you look at a house that needs a lot of work, some people feel they have to be responsible. Well, I guess I'm gonna. They assume I guess I have to fix it. So when they look at it, I guess I can fix this. I can fix. They think that they're allowed to fix the property. The truth is, you need to be a licensed general contractor, and then you hire out your subcontractors, electrical, plumbing, drywall, paint, whatever the case is, roofer. So this is all professional people with licenses and insurance, right? Just in case. Um, so it's a process. Also, because it's a federally backed mortgage loan, mortgages are very technical. This is why you have me to kind of unpack it and make it kind of relatable, but there's a lot of technicality to it. Um, there's a process that the 203K has. So you also not only need a licensed contractor, you need a contractor that is familiar and aware and skilled in the 203K paperwork process. Okay. The underwriter, just like an insurance claim or anything else, they're they're very specific. You need to have somebody that understands that language and speaks
Mhm.
that language so that it flows nice and smooth, not just the paper trail, obviously the construction side too. So you don't want to do that yourself. Trust me.
That's a great point. So, the key here is having a trusted team behind the process.
That's right.
What about timing? We all know everyone loves a 30-day closing, but what's the reality?
Well, there's the nature of renovation is construction, right? What
Mhm.
if it's raining? What if there's a storm? I mean, the Mother Nature, this is all of a sudden now a factor.
Mhm.
So, what if the crew is sick? These are things that we can't possibly control. We can plan, but when you plan, any grown adult understands this. We don't plan on the best case scenario. We plan on the worst case scenario. We hope for the best case scenario, but we
Correct.
plan for the worst. So
Mhm.
any wiggle happens within our planning parameters, right?
Mhm.
So if Matech Mortgage, if we were to rush a closing and move very quickly, it could be 2 weeks, 18 days, 15 days, something like that, rocket speed, everything going perfect on a regular transaction.
Mhm.
A regular deal, 30 days or less is no problem. But when you're dealing with doing phase one, sending an inspector over, what if the inspector's booked one day and the following day you have to wait 2 days for the silly inspector to go and check? You know,
Mhm.
the little picky things. Now you have this process that flows back and forth. The property, once it's completed, the county, the city needs to get involved to give a certificate of occupancy that you're allowed to
Mhm.
live in the
Mhm.
property. So there's other cooks in the kitchen here. So I would say between 45 days to 60 days, depending on the construction, the scale of the work, right? As so I would suggest 60 days or sooner is the verbiage on the contract. And if the work is done in 45 days, great. We accelerate the closing and close when everybody can, as fast as we can. But we want to give it a little room to breathe.
Mhm.
So the other thing I want to mention is when you're dealing with a house that needs work, the seller's been sitting on the market a while. Does anybody love me? Anybody? And nobody wants, or if the people that are making offers are these flippers and they want 30% margin, they're going to throw,
Mhm.
if it's a $300,000 house, a $200,000 offer. They
Correct.
want 1/3 in their pocket. So
Mhm.
if you make an offer that is not 30%, off, but maybe 10% or 15%. It's much better than a contractor fix and flip type offer. You can get a really good deal because it's not the best condition, but you can also get time working in your favor.
Mm-hmm.
The seller is going to be desperate to get their money. It's plain and simple. You're giving them a short window of time to get their money.
Mm-hmm.
So that's the value of your offer. And then you can really make
Absolutely.
the house the way you want it to look at a really, really good price.
Yeah.
So, but you have to give about 60 days in all honesty of time for all of those moving parts to be completed, as well as the regular credit and the income and your assets or your bank accounts. The property stuff takes a little bit more time. For that reason, 45 to 60 days.
Okay. Well, that's important for both buyers and sellers to understand upfront because
Yeah,
setting expectations early can save a lot of stress later.
100%.
Alrighty, let's finish with a question I hear all the time. Can someone use this loan to build their dream resort style backyard with a luxury pool and outdoor kitchen?
The short answer is no. FHA, if you can picture this, you have this house that's in bad shape. What would it look like brand new? What did it look like when it was first built? That's the limitations of what FHA 203K does.
Hmm.
It renovates the house to its original state in modern times. That's all it is. If you want to go into this really luxury, creative, you want a tennis court in the backyard, you want a jacuzzi, do you want to take the house that's 3 bedrooms, 2 bathrooms, knock it down to the foundation, and then expand the foundation to make a 6,000 square foot huge house? And you want a swimming pool on the roof and a slide into another pool you want to go crazy? Stay tuned for another video of ours. It'll be called the conventional Fannie Mae Freddie Mac is conventional. It's not FHA
Hmm.
home style,
Hmm.
but the FHA is limited to basics inside of the house, not expanding into really, really creative fairy tale type possibilities, which are possible on a different program.
Perfect.
Does that make sense?
Yes, absolutely. This has been so helpful because I think a lot of buyers overlook homes that actually have tremendous potential. One of the best parts is that instead of moving into someone else's dream home, you get the opportunity to create your own. You can add your personal style, your taste, and really, really make the home your own from the start.
That's right.
Yeah.
I would say that the most useful time that this 203K just starts to blossom and say, wow, this might be the best program I've ever seen, is when you are stuck with a specific school district for your kids,
Mm-hmm.
a specific place that you want to live. You want to live right off of the Gulf, right near the water, and there's nothing in that block that you really like except this horrible looking bungalow house.
Correct. Yes.
You can make that house perfect.
Yes.
That's a 203K.
I love that perspective. If you're listening and you've passed a home because it needed work, it may be worth having a conversation before ruling out completely. Alex, thank you so much for sharing your expertise with
It's
us
my pleasure.
today.
It's my pleasure. Thank you for having me on your platform,
Of
Rachel, as always.
course, of course. Our contact information will be in the description below. Please feel free to call, text, email, either of us. We'll be happy to answer your questions and help you explore your options. Thanks for listening and have a blessed day. Bye, Alex. Thank you again.
My pleasure. Thank you.